While America was fixated on its trade war with China, a quieter revolution was unfolding to the north. Canada, through careful strategy and policy, has transformed itself into a global trade powerhouse. This was no accident. It was a deliberate, long-term plan. As Washington focused on tariffs, Ottawa built the economy of tomorrow. The world has noticed, and the results are now clear. The economic story of this century is being written not just in Silicon Valley, but in the nickel mines of Sudbury and the battery plants of Quebec. The US, busy fighting China, missed the real game-building resilient supply chains for the future. While America built tariff walls, Canada built bridges of free trade and investment. The result? A major shift in North American economic power, largely unnoticed by Americans. This isn't anti-Americanism, it's pro-Canadian foresight. Canada recognized that the global economy was fragmenting, and that stability, resources, and a predictable environment would be the new gold. Canada had all three, and it leveraged them to attract billions in investment and create high-paying jobs. For decades, the US was the engine and Canada the junior partner. That's changing. Canada is now building a high-tech manufacturing ecosystem, especially in electric vehicles. It's becoming a linchpin in global supply chains for advanced economies. The US now finds itself playing catch-up to a neighbor it long took for granted. The quiet coup has happened. The question is, will America wake up to this new reality? The balance of power in North America is shifting. The world is watching to see what happens next. Canada's rise wasn't luck. It was a blueprint, executed with discipline. At its core, vast reserves of critical minerals like lithium, cobalt, and nickel. But resources alone aren't enough. Canada launched a $3.8 billion critical mineral strategy in 2022. This roadmap accelerated exploration, streamlined permitting, and built infrastructure to move minerals from ground to factory. The result? Certainty for investors, unlike the volatile US environment. By partnering with indigenous communities, Canada reduced legal challenges and created stable conditions for investment. The government invested in ports and rail, ensuring minerals could be processed and manufactured domestically. This integrated approach made Canada a magnet for global capital. Public funds catalyzed private investment, sharing risk and attracting major players. While America debated, Canada built. The world's leading companies took note and chose Canada's blueprint for the future. Canada's EV strategy is a masterclass in vertical integration. In just a few years, it's become a global leader in the EV supply chain, attracting over $46 billion in investment since 2020. The plan leveraged mineral wealth and manufacturing history to build a complete EV ecosystem, from mining to battery production to vehicle assembly. Global giants like Volkswagen, Stellantis, Ford, and Honda have all committed to massive projects. These investments are creating tens of thousands of high-quality jobs and transforming old industrial regions into the new battery belt. Strategic public co-investments and a clean energy grid made Canada irresistible to automakers. Compared to the US, Canada's stability and faster approvals gave it the edge. The Quebec to Windsor corridor is now North America's most important EV hub. Canada isn't just winning projects, it's capturing the highest value segments of the auto industry. The future of manufacturing is being built in Canada. As the US retreated from global trade, Canada sprinted ahead. Canada built a vast network of free trade agreements, making it one of the world's most connected economies. It's the only G7 country with free trade deals with all other G6 nations. The CPTPP gives Canada access to 500 million Pacific Rim consumers. CETA opens the door to the EU's 450 million. When the US left the TPP, Canada led the revival and secured its place in Asia-Pacific. For global companies, Canada offers a unique trifecta access to the US, EU, and Asia-Pacific markets. This web of agreements has driven export growth and made Canada's economy more resilient. Diversification has reduced dependence on the US and cushioned against global shocks. By embracing global trade, Canada built a durable competitive advantage. In the 21st century, economic strength comes from connection, not isolation. In a world of rising risk, Canada's greatest asset is stability. Global corporations crave predictability, and Canada delivers a stable political system, social cohesion, and rule of law. While the US faces political swings and policy uncertainty, Canada offers calm and consensus on core economic issues. Multiculturalism and immigration have created a diverse, skilled workforce, another draw for global companies. For investors, Canada's open approach signals a safe, welcoming environment for talent and capital. This reputation lowers risk and attracts more investment. Companies like Honda cite Canada's stability and talent as key reasons for their multi-billion-dollar commitments. In the global competition for capital, stability is the new currency. Canada is one of the world's wealthiest nations in that regard. While Canada executed its strategy, the US took a different path. Tariffs. The goal: protect American industries and punish unfair trade. The result: chaos and uncertainty. Tariffs didn't bring manufacturing back, they raised costs for US businesses and consumers. Studies show US importers bore nearly all the tariff costs, acting as a tax on American industry. The focus on punishing China distracted from building resilient domestic supply chains. Allies like Canada and the EU were hit with tariffs, eroding trust and prompting retaliation. For global investors, this unpredictability was a red flag. Many companies looked elsewhere, often to Canada. The US mistook trade deficits for the real problem: declining competitiveness in future industries. While America fought old battles, Canada prepared for the next: EVs, critical minerals, clean energy. The US created confrontation, Canada fostered collaboration. The trade war was meant to make America strong, but it opened the door for Canada to surge ahead. The lesson: strategy beats bluster. The numbers tell the story of two diverging economies. In 2023, Canada attracted $75 billion in foreign direct investment, much of it in high-tech manufacturing. In the EV sector, Canada secured over $46 billion in investments since 2020, creating thousands of advanced manufacturing jobs. The Volkswagen and Honda plants alone are transforming communities and careers. The US has seen EV investments, but regulatory hurdles and uncertainty have limited its gains. Canada's trade agreements have driven export growth, $52 billion to the EU in 2023 alone. This diversification buffers Canada from US downturns. Meanwhile, the US trade deficit remains high and tariffs have failed to deliver results. Canada's job growth is strong, especially in green and advanced sectors, and inflation is more stable. The US economy is larger, but Canada's methodical approach is delivering real results. The data is clear. Canada's strategy is working. The quiet revolution is measurable, and it's changing the game. Canada's rise is a wake-up call for the US. America stands at a crossroads: double down on tariffs and isolation, or learn from its northern neighbor. The current path risks further isolation and missed opportunities in future industries. The alternative? Compete smarter. Streamline permitting, re-engage with global trade, and build public-private partnerships. This isn't about copying Canada, but about adapting to a new era where strategy and stability matter most. The world has changed. Economic power is now about agility and resilience. Canada has shown how a middle power can thrive. The US must decide: fight the battles of the past or adapt for the future. The clock is ticking. The quiet game to the north has already changed the board.